Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's take a look again on the gold market. Here the situation is a bit better than on the forex market. On stock market, as you can see, that gold shows a bit better resistance to the negative factors that we have on the market, but mostly to the one of them. It's Evergrande coming default on the bond payment. As China real estate giant, as you know, now it's a lot of news stand around this company, and investors are a bit frightened that it might trigger some default chain, or it could mean that it's not everything good stands in China's economy, as the big real estate company is ready or stand at the eve of the default. So it was really major news in the weekend, and recently it was one of the major factors that has pressed on the forex market, on the stock market, and pushed prices lower. But since any scandal and the problems mostly stands positive to the gold and increased demand for a safe haven, as you can see, gold has passed through this event relatively flat and shows even some bounce up from the support area. But at the same time, the other factors that now pressing on the gold are not eliminated. So it is comment the Fed statement and possible tapering that might be discussed in September. Anyway, based on the technical picture that we have here, it's difficult to call situation in the gold market as a positive. So in general, we said that although we have the bullish pattern stands at the point, in the vital point, and you can see market was able to stay here and hold above this level during the recent trading session, showing the bounce, but overall view of this pattern is not very good, because we have very strong sell-off on the slope of the right arm, which is not good for a reversal, bullish reversal pattern. It means that this is temporal pause before downward continuation. And that's the moment that, increased chance of the failure of the pattern and makes trading of this pattern is a bit tricky and risky. So it doesn't mean that we can't try to do this, especially, this market stands relatively close to the invalidation point, which is actually below this area. But we should understand, recognize the risks that stands with this possible trading of this setup, and be ready that chances on the failure of this pattern are higher than usual. On the lower time frame, another reasons that point on the possible downside continuation is the speed of the CD leg here. So you can see that drop to the OP was straightforward, very fast, and market mostly stands right now at some sideways action, showing minor response to the OP, but no clear bullish reversal patterns are forming here, and we do not see any thrusting acceleration, fast rebound here, so market mostly stands flat. And acceleration on the CD leg, despite we stand currently at some kind of the agreement with the major support, and it really stands high that market proceed lower to the XOP. Besides, since we have bullish patterns on the dollar index, it means that gold could remain under pressure within the week or a couple of weeks until dollar index will not reach its destination point on the weekly chart. That significantly minimizes the chance for the gold to show any strong upward direction. Other negative factors that gold has right now we also discussed in the weekly report. This is in general weak sentiment. This is ignorance by the markets and by the investors any signs and news that indirectly supports the gold through the weakness of the United States dollar. All these details and nuances have been ignored, and that just reflects the attitude of the markets to the current economic environment, especially based on recent positive retail sales. So it's difficult to suggest that gold could show currently more or less significant upward action. So that's why in the current point, as we said, theoretically you could consider any long position right at the support, because this in general not bad support at all. But you need to take all responsibility and understand the consequences. That currently market stands in a weak trading setup, and the chance of the failure a bit greater than usual. Besides, if you'll take a look at the hourly chart, I do not see yet here any clear bullish pattern. One thing that we could suggest, yes, we have the divergence, but it's not enough. One thing that we could suggest is maybe the deep 127 hand and shoulders pattern, but you can see that 127 extension has not been reached totally, and to form this pattern, market will need the deep right arm as well, so to keep some harmony of the reversal or something of that sort. So maybe it makes sense to wait a bit more and for more bullish signs, and to understand and get more clarity to understand how market intends to react on this support area where it stands right now, and whether then reaction will happen or not. Potentially, for taking the bearish position, we could consider 1782 area. If market will show some kind of the ABCD retracement here, we could get cartridge triple to sell, and that will be retesting the previous low. So this area looks interesting currently for potential short entry if overall context, overall sentiment on the market will remain the same. So that's actually what we have currently on the gold. On the interest rates, if we'll take a look at the United States 10-year bonds, situation stands not very bearish actually, I mean in relation to the gold. So because you can see market can't get bounced up from the current level. So in fact initially it has shown trying to move higher on retail sales, but then interest has dropped back. So and you can see after the upper direction market turns to some sideways consolidation here, so which mostly stands supportive to the gold market. So because inside of the flag, the sideways action that can't show the action back to the upper border of the pattern looks bearish for interest rates and supportive to the gold. So if interest rates will collapse, maybe gold market could show some a bit deeper retracement, but all the stuff stands as if and then. So at that moment, in current moment, we do not have it, and maybe it makes sense to sit on the hands and wait a bit more. As for clarity of the market response to the support, maybe some patterns will be formed here, maybe something else will happen, and to understand in general whether we will get the bullish pattern or not. That also could help us for the taking the short position. So if market indeed will form something bullish here, we could get better price for taking the short position and possible downward continuation. So that actually leaves us no options to act right now. So and we think that at the current moment it's better to wait and see what will happen within the couple of sessions on the gold market.